Good morning, it's Monday the 7th of February and welcome to Atlantic Capital Markets Roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the biggest stories straight afterwards. So let's get straight to business. So let's take a look at the economic numbers being issued this week. And starting today, we'll be hearing the latest Australian retail sales figures. We'll also hear the latest Caixin composite PMIs in China, German industrial production numbers, and the EU Centix investor confidence. Tuesday brings us the balance of trade over in Canada and the balance of trade over in the US, and finally the Australian consumer confidence numbers. Wednesday brings us the balance of trade in Germany and, as usual, the EIA crude oil stockpiles. On Thursday, we'll hear the update on inflation in the US with the release of their latest CPI figures, and that's something that we'll discuss in more detail in a moment. And also over in the US, the initial jobless claims numbers. And finally, on Friday, we'll hear how GDP's going over here in the UK with the release of the latest update, and we'll talk more about that shortly. And we'll also hear how inflation's doing over in Germany with their CPI figures and the US Michigan consumer confidence numbers. And the companies that we'll hear updates from this week are as follows. On Tuesday, we'll hear the fourth quarter results from the oil major BP and full year results from the global software and robotics business OCADO. And we'll discuss both of these companies in more detail straight after this. Tuesday also brings us Bellway, Chewy, and over in the US, Lyft. And finally, American exercise equipment and media company Peloton over in the US, releasing their Q2 earnings. And again, we'll talk about that straight afterwards. On Wednesday, we'll hear from Barratt Developments, Dunelm, and GlaxoSmithKline. And also, over in the US, Disney announces its Q1 earnings and Uber its Q4 earnings, both of which we'll discuss afterwards. On Thursday, we'll hear from AstraZeneca, Unilever, and over in the US, Coca-Cola, PepsiCo, and Twitter. And finally on Friday, it's the turn of British American Tobacco and Under Armour. So last week saw the Reserve Bank of Australia, the Bank of England, and the European central banks move in a more hawkish direction after the Fed did so the previous week. Well, the US NFP report was much stronger than expected, giving the Fed more wriggle room as inflation hits a 40-year high. Unsurprisingly, US inflation will be firmly in focus this week. Separately, British Prime Minister Boris Johnson's future will remain under the spotlight as he fights for his political life. The number of letters received by the 1922 committee is rising, so what will this week bring? And on the wider stage, geopolitical tensions in Russia and Ukraine help push oil prices to a 7-year high. Any developments here will of course be closely watched. So with all that buzzing in the background, let's take a look at some of the big financial stories in this week's diary. Surging oil prices should help BP's numbers when they report Q4 results on Tuesday. Well, BP's share price is up 15% so far this year, in line with the rally in oil prices. Yet, despite oil prices sitting at a 7-year high, BP's share price is still below pre-virus levels. And this actually is due to the company attempting to transition towards a greener future, with renewables seeing a lower margin. And this is at the same time as keeping shareholders happy with large-scale share buybacks. BP made good progress towards reducing net debt. At the end of Q3, net debt was down to $31.97 billion, and that was down from $40.4 billion just a year earlier. Cash flow also increased to $5.9 billion, and that was up from $5.4 billion. And underlying profits also rose to $3.3 billion. Q4 production is likely to have ramped up as well following the restarting of operations in the Gulf of Mexico after Hurricane Ida, which could see management signal towards further share buybacks. Also on Tuesday, OCADO will release its full year results, marking the first time that we have heard from the group since Christmas. OCADO had a stellar 2020. However, the share price has dropped 50% over the past year and down 10% since the start of the year. However, the share price is still up an impressive 450% over the past 5 years. Attention will of course be on future guidance, particularly if it's revised lower. The results come hot on the heels of a presentation from management which revealed a new, faster, cheaper and lighter robotic series for its automated systems, which could help reduce labour costs by 40%. And this should boost OCADO's chances of striking yet more online deals going forward. The losses in this division widened to $56.6 million following higher investment, which offset the revenue increase coming from 2 online fulfillment centres coming on stream for Kroger. The retail division, which is half owned by Marks & Spencer, will also be under the spotlight, with investors watching how much of the increased demand from the past year and a half is permanent. And finally on Tuesday, after a great 2020 as one of the top performing stocks of 2020, 2022 has seen a rough start to the year for US-based Peloton. The stock surged in 2020 as people were stuck at home with limited exercise options. However, management overestimated the sustainability of that demand, which has dropped considerably in 2021 and 2022. Peloton has already announced preliminary Q2 results in an attempt to calm investors' fears amidst a huge sell-off in the stocks on fears of demand completely evaporating. Q2 numbers weren't actually that terrible. Revenue forecast at $1.14 billion lies within the range of $1.11 to $1.2 billion that management guided for. Subscribers of 2.77 million is slightly below the 2.8 to 2.85 million guided for. A loss per share is expected at $1.28. So with all this in mind, of course, investors will be keen to hear more about cost-cutting initiatives. Uber releases its Q4 earnings on Wednesday. Now, Uber had a tough time in 2020 when the virus hit. Whilst food delivery initiatives helped support the business, the mobility side, the core operation, suffered. However, as economies have reopened, demand has ramped up. December has been highlighted as a particularly strong month, although operation levels remain below that of late 2019, early 2020. UK and US minimum wage and benefit requirements for drivers has added to the cost base, pushing it higher. Expectations are for gross bookings of $25 billion to $26 billion, with loss per share of 33 cents on revenues of $5.35 billion. And it seems like Netflix's disastrous earnings were a long time ago now. So Disney will be hoping not to suffer the same fate as they release their Q1 earnings on Wednesday. Netflix earnings flagged warning signs over Q1 subscriber numbers, citing increased competition. Well, Disney Plus is the main competitor, so the big question is, will Disney Plus mirror Netflix's weaker outlook on subscriber numbers, or indeed benefit from it? In Q4, Disney missed on both top and bottom line as it showed slowing subscriber growth to 2.1 million. However, Disney is a more diversified business, which could help numbers in Q1, although the virus could also slow growth, particularly in the parks business. Q1 earnings per share are expected at 61 cents on revenues of $18.74 billion. US inflation, as measured by Consumer Price Index, rose to 7% year-on-year in December, the fastest pace of growth in 4 decades. Well, there are signs coming through that inflation could have peaked and could start to ease. The Producer Price Index, which measures inflation at the factory gate level and is often considered a lead indicator for CPI, actually ticked lower to 9.7% in December. That was down from 9.8% in November. Looking at the monthly figures, PPI was up 0.2% month-on-month in December, a significant slowdown from 1% month-on-month recorded in November. The Fed, in the latest Fed meeting, adopted a more hawkish stance against rising inflation, suggesting that policymakers aren't expecting any notable and continuous slowdown in inflation anytime soon. So, as a result, do keep an eye on the US dollar and US indices. Friday brings an update on GDP figures in the UK. Well, the final quarter of 2021 was looking set to be a solid quarter until the latest variation of the virus hit in the final month. Well, the work-from-home restrictions and resultant economic hit meant that economic growth stalled. When looking at the monthly GDP, we see growth of 0.2% in October, and momentum even picked up in November, with growth of 0.9% ahead of forecasts, thanks to strong industrial production and construction. So the question is, how much of this would continue over into December, helping to offset a sharp drop in consumer-facing activity and retail sales, which tanked down 3.6% in December. Well, expectations are for economic growth to have slowed considerably in the final quarter. So as a result, do keep a watch on the pound and, of course, the FTSE. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. And it's another quiet week for the FTSE 100. But it's a busy week for the FTSE 250 when we'll hear from Virgin Money, Endeavour Mining, Greencoat UK Wind, Henderson Smaller Companies Investment Trust, ICG Enterprise, BMO Commercial Property Trust, the UK Commercial Property Rights, Renewables Infrastructure Group, and finally Murray Income Trust. So those were the highlights coming up this week. As always, thanks for watching. And if you don't know already, as well as our weekly look ahead videos, we do also produce all sorts of interesting specialised videos for the investor, ranging from our share tips through to technical training and how to deal safely in the various markets. So why not click on that subscribe button so you don't miss out on any of those. Also, don't forget our app, which is definitely worth taking a look at if you're a keen investor. So until next time, from all of us here at Atlantic Capital Markets, do you have yourself a great week.